Hello, everyone, and welcome to Market Talks. I'm Ray Salmond, head of markets at Cointelegraph, and in this show, we discuss the latest market trends by gathering valuable insights from industry leaders, traders, and analysts. Today's guest is Adrian Zduńczyk, the founder and CEO of the Birb a community-based trading platform. Adrian, or Crypto Birb, is a successful Polish entrepreneur and the founder of the Birb brand, a dynamic startup scaling up to become a global consulting company. Crypto Birb is also a chartered market technician and boasts a following of more than 660,000 followers across all of his socials. Let's take a moment to look at a short video about Adrian. Adrian, welcome. How are you?
I'm great. What a cool intro you got. Thank you so much. You always do such an incredible job up there in Cointelegraph. Love you guys.
Hey, a big guest requires a big intro, right?
Big guess. Well, I could argue there are so many more people that I look up to every single day. I just feel so small every time I talk to them.
You're humble. That's good. It's good to be humble and um, I guess to not soak too much of the limelight up, right? I guess calamity can befall any of us at any moment. Something that we've learned in in like the previous bear markets and even in this current bear market, right?
Yeah, you are so right about that. I mean, bear market always humbles, keeps you down to earth. It always humbles you, eventually. It's an extremely difficult environment not to lose money. And we as traders, we as people, we hate losing in the first place, right? Before we love winning, we hate losing. And just bear market is an extremely difficult terrain, to be at the time.
Yeah, it seems to be all about just surviving and staying solvent, right? You don't want to blow up your portfolio and then not have anything left to invest when the trend begins to turn. So it seems like our strategies have to completely change. Either you stop trading during a bear market or you have to adjust your strategies, don't you?
Yeah, yeah, you made a very valid point actually, right? So, of course, I'll do my best to develop into it as we go through the show. Uh, just to anchor it a little bit, you're completely right for also what regards so-called trend following, right? I'm a trend follower, kind of like a position trader, so I would open a position not no more than just once a month on average, right? And what I do is I wait for those trends to emerge, for those longer tails that are persistent and directional, that you know it's that is completely different and opposite to what we are looking at right now, for Bitcoin, right, which is kind of like chops around and stops people out both sides and the edges of the pattern. And profiting from those longer tails in the bull market means sitting along with the trend, right, which grows and develops, which means exposure. However, you're completely right that by entering into bear market, those trend following signals and any technical analysis indicators, they're going to promote cash, because it means that, well, you only enter a market when you have a reason for it, right? Other than this, unless there is a signal, other than this, you kind of like stay on the sideline, you stay waiting in cash. That's what I did for most of the year last year.
So is part of your bear market strategy to go on late night drives and do interviews with people? Is that helping you in your trading?
That's an excellent question. I'd love to be, very transparent. Of course, I got like a last minute change to my schedule. However, I could never in my life just, uh, well, disappoint Cointelegraph, where you always do such an incredible job, right? I would be the last person on the earth to, call off something as magnificent as the show that you always put up.
That I do appreciate because last minute cancellations are difficult, but drive safe. So getting back to your strategy of what you do during bear markets, you basically said that you sat on your hand in stable coins and in maybe a few well-chosen long positions throughout the majority of 2022. Without, giving investment advice, does that mean that you're not a dollar cost averager or a accumulator? Do you not see any accumulation patterns in like Bitcoin's market structure or in its on-chain data? Are you one of the type that's just like, let me see the trend change course, and then I'll just ape and ride that new uptrend? Or do you have multiple strategies that you're using during a bear market?
Mm. Man, that is a very, very good and complex question, right? And the only issue I've got with myself is that I can never shut up, when those type of topics come up. So please, tell me to shut up at one point. Um, it's a brilliant question, and it has so many different angles and factors to it. So long story short, being a trend follower again means having some sort of like a systematic approach, right? So what you touched upon is a difference between the discretionary trading based on opinions and based on emotions, feelings, which tend to disappoint us most of the time, in fact, versus what we know as non-discretionary or mechanical, algorithmic, or systematic trading, right? Those are all synonymic versions to it. So what I do, like I am not a IT programmer. I am not a coder. I don't code in Python. I don't code in C# or JavaScript and so on, right? I know just a little bit, just a tiny little bit, uh, to understand, for what is essential and how it can be utilized and trading cryptocurrencies. However, what matters to me as a trader from the trading perspective is, that I follow certain fixed principles and rules, right? And I had recently read this extremely impressive book by Daniel Kahneman, a Nobelist for economics. Uh, and the book was about noise, right? And the sources of noise, basically. The noise, which is this unwanted variability in the judgments, where the instrument of measurement is human mind, which tends to be so disappointing, which tends to be so inaccurate most of the time, right? Because on something, depending on something as simple and as innocent as mood, as weather, as the temperature outside, we are going to be influenced by that and see completely different stories in the charts, right? So that's completely, you know, that's a big fault to our thought process, and because of that, following the systematic rules, guidelines, for what we know about trading, having these fixed markets that we trade instead of jumping on a bandwagon every time a coin moves somewhere, having specifically fixed and decisive entry and exit formulas, right? What kind of like indicator it is going to trigger, be it, a moving average crossover or some volatility, breakout on the ATR, average true range. There are so many other different indicators, many different types of categories of technical concepts for confirmation of a trend and of a breakout. And, just again, I could go on and on infinitely. Myself, I do trade trend breakouts. So it doesn't only need to be a trend up there. Of course, it needs to be trend. So the moving averages on average should not go sideways, right? The trend means directional movement that tends to persist in one direction. It's be to the upside or to the downside. Anything else is just not a trend, which means basically that I will keep longing every upwards breakout that is, well, confirmed by let's say even the daily close or weekly close above a specific level, which tends to align with a specific volatility amount as well. In order for this trend breakout to be confirmed, and I would never fade the trend, which means that again, if there is this longer tail developing to the upside, I will follow it. I will never trade against it. If there is this bear market primary trend, which it existed in the last year, I will never trade counter it, right? Unless I have this specific reason, to the chart tells me that I should basically do the opposite, right? Most of the time, again, 70% of the time I lose. I lose because most of the time markets move sideways, right? They do not trend. However, once in a while, they follow those infrequent breakouts, those bursts in prices that just hit those new records, that just break above those, 52-week highs or 10-week highs, or, regardless the specific range size. Mm, and that's what I enter, right? So 70% of the time I'm going to lose about trading. And I do focus on waiting for those 30% of wins that are infrequent, but they tend to persist. Those are so-called fat tails in the return distribution that just are exceptional sources of very good returns, right? I know people who traded counter the bull market, right? I know people who betted short, who did bet short on the, ever since the March COVID crash, and in 2020, and they shorted the entire bull market up on 2021 peak. That's what it means to kind of like just fade those extremely persistent tails. We just continue to step up and go fatter and fatter and then beyond anybody's expectations, to the upside in the bull markets and to the downsides in the bear market. Yeah, does that make sense?
Yeah, that makes perfect sense. What I'm taking from you is that you don't necessarily trade chop or consolidation or sideways price action. You more so wait for a breakout. So if we see like a basing pattern or a rounding bottom in an asset and volumes beginning to uptick, I understand that you're going to look at the neckline and look for a breakout from that neckline and maybe a few daily closes to confirm the strength of that breakout and that you ease into that trend with size. So that makes sense to me, like perfect sense. So when you wake up in the morning
Mhm.
and you decide that you're going to trade, what's your general approach or set of procedures that you go through as you begin to connect with the market?
Mm. Very good question. Very good question. So maybe it will come out as a disappointment, right? Like I said, I am not a day trader, right? I am not this type of you know, of a guy that is just that used to be, you used to see them in the movies on the exchange floor, right? Two phones, one hand in, one hand on another phone, and the second hand, holding another phone, and they would be, yeah, buy this, sell this, and doing all of this very spectacular things. While in reality, trading is extremely boring. It should be boring, right? It's only about executing, like pressing on the buy and sell button. Everything else is complete mess. It's complete noise and unnecessary. It just disturbs the picture, right? So I would say that again, it will just come out as a disappointment for what I say, right? Because many people will expect, because of some sort of like a prejudice or stereotypes that they see in the movies or that they read about, when you type in trading or cryptocurrency trading, and Google, what comes out is this picture of this guy sitting in front of a wall of screens, 50 different screens, and like I said, this screen shows buy, this screen shows sell. I'll do go, and press 50 buttons at the same time, locked in my basement for 24/7, right? So that's not a reality. That's not what it looks. Being a trader is extremely boring, I would say, right? So I spend most of my time overall on growing, on developing, on learning. Um, so I do take on a position, every on average, right? It varies, however, depending on when the signal comes in, um, every month, right? Every once in a month, maybe at times, like I said, if it chops around, I just go every 2 weeks, every 3 weeks. However, my job is to allow myself to get chopped in sideways, for which is what the most of the time market does. But I allow myself to keep longing those upwards breakouts and keep shorting those, or keep exiting those. Well, short is an equivalent of or underweight on portfolio, or the just being cash, in fact, right? So being short or being flat in cash and not exposed to coin whenever there's a downward break, right? It's in a capital preservation mode a little bit, and I will just keep on doing that until it finally catches on fire, and until it finally comes and shows off those tails, just like we've seen this incredible tail from $4,000 to $65,000, right? So that's what I'm waiting for, and until I happen to get that, I lose 70% of the time, right? However, those 3 times out of 10 that I win, they are so strong, they're so overwhelming because of those persisting movements, that they return and compensate for all those small losses, right? It just takes a one good trend trade to flip back all of those tiny little losses that I'd had. So that's the reality of my personal trading, right? My personal day trading routine starts, well, around 7 a.m., which is when I want to run, basically get myself to wake up, so I never keep my phone anymore. It's some sort of like a night shelf or something. I put it away from me so that it forces me to wake up and just make this move, right? Drag me out of bed. So until I reach out to just cancel my alarm, or should I say accept my alarm, I'm already awakened. So what I do is that then I take a walk, or take a run, morning run, with my dog, right? The dog needs to basically go for a walk. So I just utilize that, and I do just kind of like a 20-minute run, 2.5 kilometers approximately. 20 minutes run, which is when I turn on my earphones, the gospel, right? Myself, I am a Christian, I'm a Catholic. So that's a perfect time for me to, well, meditate a little bit with prayers, tune in, set up positively, set my mind frame, for a good track. And until I come back, I'm already warmed up, right? Which is, I'm not really going to go back to bed anymore. Then I follow this a little bit of a short 10, 15 minutes, a little bit of stretching, just, 150 push-ups, in a series, just to wake me up a little bit, go take a shower and run off with my priorities, right? And those priorities, most of the time, they do regard the businesses that I do much more than trading, right? Because trading I otherwise do only once in a month, once in 2 months, right? I of course have my long-term portfolio investments, which I don't take. I have, I have a real estate portfolio which I manage with the help of my team. I I'm diversified outside of crypto, so I never allow myself to be in so much risk anymore. Just holding all my money in crypto, right? Exchanges go, you know, like it's nothing overnight. They disappear, they crash, they collapse. Nothing is said, and everything comes with risk. So my job is to diversify this risk, right? So I own a couple of firms, a couple of businesses. One of which is this excellent firm consulting that you mentioned about the Birb nest, which is in its sixth year of rolling. Except or despite all of those bull markets, bear markets, those crashes, FTX, none of them this can stop this powerful team that we've got and built over the years. That's pretty exceptional talents that I did manage to associate myself with, and I couldn't be so more proud about that, because I learn from these legends every single day, right? This is such a powerful combination of people, and it's a team to manage, it's a company to manage, it's a project set to run. So I focus on my firm, right? Even though I don't need it per se for the money. Let's say past months, where Amazon was firing hundreds of tens of thousands of people, Meta, Facebook was firing thousands of people. uh, of course, it's a difficult business environment, right? While the economy just stands, well, a step away from falling off a cliff of recession. So I wasn't taking my salary for the past couple of months, for half a year or so, right? I'm not doing this for the money. I'm doing this because I kind of like consider this my business baby. So I spend a lot of time growing, developing the business. Just establishing context relationships with the right people, and I just do take pride and enjoy coming up to the shows like this excellent show of yourself that you're running, man.
I wish I could see data on traders who are behind the screen 24/7 versus traders who just trade once per week and once per month to see whose P&L is the greatest, who's having, the highest profits and losses. It would be cool to see a really comprehensive, large study on that. But I know that some previous studies suggest that like 95% of day traders aren't profitable. So it was interesting to hear your process. It's not like waking up, looking at equities, looking at gold, looking at DXY, looking at Bitcoin, looking at total crypto market cap, looking at Ethereum, then looking at altcoins and their BTC pairs and other large caps in their BTC pairs and trying to figure out where is there confluence and not confluence. Your process is interesting. What are two coins besides Bitcoin that are standing out to you right now?
Mm, very good question. And well, if I may just comment on the last point, right? I do follow and create those every single day, those market catch-ups, right? We have those internal team calls, where we fill in the secret ballots to gauge the noiseless opinion about the market as much as we can, right? So there is a lot of course, technical process behind it. It's not that I'm basically unemployed as a trader and I just go and lay back. There's tons of process that needs to be informative and decisive before I make a decision, right? So just executing the trade is something that is as simple as clicking on the button and that's all. Uh, Other than this, like I say, I definitely look forward to having those full-blown blown out stages of the bull market that we did see in 2021 eventually, that would bring so many people to the market, so much interest, right? So many interesting projects coming up and developing, and that typically, comes with a very, very good time for trend followers and those new projects emergencies, right? So when those new projects emerge, that's when I go aggressive about more investments, right? However, for now, most of my crypto wealth, if you will, is within Bitcoin. You're right about that. It's within Ethereum. I still have my some of my Litecoin positions, right? Of course, I'm people loved, mock me about my very bad prediction about Litecoin, which I made 20 before the bear market came in, right? Before all of those wars came up and those crazy FTX crashes come up. So one thing is that nobody can predict the future. So just maybe there's some new black swan coming up right around the corner. We don't know that. However, I do mostly position myself towards Bitcoin, Ethereum. I've got some Litecoin. However, it's rather marginal. It's not big, and I do wait for those outliers, right? So, for instance, those outliers, those new opportunities, those new narratives, they come with gaming, they come with DeFi, with NFTs. Of course, this is still a very interesting topic. And holding Bored Ape Yacht Club, for instance, right, just saved uh, a bunch of money when, even though it was, let's say, down, 5, 10, maybe 20% at one point, the market was down 90%. I take those odds, right? I so much more prefer to be 20% down, 100% down, if you ask me, right? So I keep searching for those new narratives. I can tell that there is this of course decentralized finance, this GameFi aspect to it. I do make some small investments, which are all fully disclosed, up on Twitter. People can look it up. Some of them are still forming, right? And being a CMT chart and market technician, I definitely have to do everything by the book. And this is definitely the big, big responsibility in terms of the quality that I need to provide, right? So I keep forecasting and trading as separate as possible. My opinions can be wrong, just the way it was terribly well off, crazy wrong about
Mhm.
Litecoin. I hadn't made so many
Hey,
wrongs. I also made so many good
well,
predictions. Yeah.
props to you for being able to admit to sometimes being wrong and taking accountability for that. I think too many traders in professional circles and on crypto Twitter have this image of it's only up, right? I'm only ever making gains. I am the ultimate source of alpha. I never take losses. They're not transparent about that. And whenever I hear someone that's able to admit that, hey, that was a bad call, I was wrong about that, I took a loss on this, but here's how I pivoted and survived. That's like more insightful and valuable than just pretending that you're the best trader on the planet. And as we move into the next question, first of all, like Litecoin is still doing its thing. Sure, it didn't reach the price
Yeah.
targets in the bull market that people expected, but the whole Litecoin pre-halving narrative is great. Like in that $75 to $95 range, it's still in an ascending trend. It's still respecting the 20-day moving average on the daily. The like super guppy indicator is green on it. The whole moving sweet indicator on it is green. I'm not interested in it as
Yeah.
a spot asset, but from the vantage of like perpetuals, I see it as a good long trade because of that pre-halving narrative. So price already tested like 103, 104. Looks like there could be some selling at 117. If we get crazy, we could hit 147 to 167. That's a good momentum-based trade if you're long on it and you're easing into that uptrend. So while I don't know what the project's doing and I don't know what utility there is for the token, and there's not high demand for like crypto payment rails at the moment, which Litecoin offers, right? Like
Yeah.
fast transactions, low fees. There's not a lot of demand for that at the moment. As a momentum-based trade from the vantage of like perpetuals, I also find it interesting. So it's not a moot point, right? It's not a bad investment yet. But let's zoom past that and talk about Bitcoin. So the Bitcoin halving is like 1 year and a month away. when you look at the daily and the weekly and the monthly market structure of Bitcoin, are you getting any sort of early insights into how this cycle might be developing? Everybody wants to know your thoughts on the upcoming Bitcoin halving.
Mm. Yeah, you brought a very excellent point, to be honest. I mean, so there are a couple of factors. There is technical factor to it, which is a little bit more self-fulfilling. And there is this fundamental factor, which is basically built in and imprinted in Bitcoin's protocol itself, the way it was designed, right, by Satoshi. So typically, when we look up at the chart, I often post those charts on Twitter. And I think that it's going to be difficult to be wrong about that, at least from the historical context perspective. Each and every single halving was a big stimulus for the bull market to blow out, like for good, right? To just go crazy. And typically, before the halving comes, the market will have already gone up a lot, right? So I do imagine that we've seen already this market rotation to the upside. Like I say on Twitter, like I say, everywhere. Like 2 days ago, I was talking about it in London stage, like blockchain economy, for keynote that I did prepare. And what's relevant, what matters, is that those halvings are sources or incredible demand increase, right? Because it slices down the mining rewards, the block rewards, by half, right? So it reduces, or should I say, it reduces the availability and increases the demand, right? The demand per unit. So typically when there is less of something, we want to have it more, right? We want to have something that is scarce. We want to have something that is valuable. And of course, the scarcity on its own and of its own, can be a source of value somehow. So building this digital scarcity over time, I think that unless regulators step in and do something crazy about regular regulations there, I think we're looking at another impactful stimulus to drive the prices higher into the fifth bull market. I think that we have already seen the market rotation in this direction, right? We broke above the 200-day moving average and got this breakout confirmed, across all the technical concepts known to human. We are talking about the volume burst that happened at the breakout day, which is not obligatory however, when it happens, it's an additional value and confirmation. The time spent above the breakout level of $20,000, which was this 200-day moving average, which represents this primary trend, this bear market, bull market, So we broke above this bear market trend and spent almost what will have been 2 months, right, above it. So it's difficult to argue that it's an accident, right? This noise, those tiny little fluctuations typically are like 1% move up above the threshold, triggers the breakout, right? Myself, I get stopped up there. However, it hides on the same day, right? Or it hides at on the next day or something. So those are the non-persistent movements. However, when the price travels 65% of the lows to the highs, well, how much of accident is there, right? If you know what I mean. We're talking about the volatility burst and increase. We're talking about, this breadth improvement, right? The market breadth is a very interesting aspect and an angle from the technical viewpoint, because it tells you about the overall market directions, right? The whole industry as a whole. So by observing something as simple as bullish, the percentage of bullish coins, the coins that broke above the 200-day moving average, we've traveled in about over a month from month and a half or so, from 5% at the beginning of the year to what it is right now, over 50%. So 50% are trading above their moving average. And we're talking about this influx, this exponential move increase in this breadth improvement, which tells me that this is a whole market awakening. It's not just that the market stays flat and Bitcoin pops out, right? It tells me that the whole narrative, the whole crypto is gaining back interest and it awakens. So we are looking at this confirmed breakout in the direction of a new bull market. We are seeing exactly the same patterns that we had seen that preceded each and every single bull market before it went crazy, right? It's still probably in its very early infant stage, which is why we're not really spectacular or hot about it all over the media. And the mainstream media can only tell about that when this is full of buzz, and then people just get full of lots of interest, right? Other than this, those halvings historically have always been driving the scarcity up, right? So driving the prices higher. At the same time, we are of course talking about the macroeconomic aspect to it, right? The markets do not trade in vacuum. We're talking about the pre-election years. This year is a pre-election year, and over 84 years, the seasonal pattern tells you that only one single time there was a one losing pre-election year on the record. One losing year in over 84 years, right? So what I said also on the London keynote stage 2 days ago is that it's a little bit parallel to reading the temperatures during the summer. Imagine there's 100 Fahrenheit. I imagine during in summer, somewhere up in state in a cool place. Then if it happens and it repeats, the seasonal pattern repeats for this hot summer to be hot over 200 years or 300 years, then what are the odds that you're going to be right about betting on negative temperatures this year, if you know what I mean, right, in the summer? So of course there's no guarantee. We don't know what the future holds. We don't know what the temperature is going to be tomorrow. We don't know, perhaps this year maybe there is this cataclysm coming and the world just rotates in terms of the temperatures and we get this ice age back immediately overnight. We never know. The low chances are for it, right? And our job as traders, as investors, is exposing ourselves in the direction of what is likely and withdrawing, backing off from what is unlikely, right? So we follow what is likely. We try to withdraw from what is unlikely. That's the way to manage the risk, in fact, right? So
Right.
betting against the positive year that in over 84 years for the pre-election, brought only one loser, I would argue is not really good to bet against that. Yeah, would you agree?
Yeah, I totally agree. And you're basically saying that makes sense. I don't even need to re-clarify it. Just historical data and historicals in terms of price action and other trends give you valuable insights on what could possibly happen in the future. And that helps you to position. But of course, nothing is guaranteed. Now, you've stopped moving, which makes me think you've reached your location. And I don't want you to be late for your meeting. So I only have two really quick questions for you. One is, I was looking through your Twitter and you've said that you think March will not be a kind month for Bitcoin, not as kind as January and February were. So just run me through that real quick. And then the other question is, I want to know, what did you give up for the Lenten season?
Very, very good. So regarding the seasonality, again, there is no guarantee for what the future holds what it looks like. However, our job is to read the past, right? I mean, it's proven statistically and financially and historically overall that looking at the past data, looking back into history, can be source of valuable information. Valuable in terms of the one that can help you dictate predictive powers, right? The predictive rules that really work. At times they won't work. However, this consistency applied over something that works most of the time is good enough. So looking at a 12-year pattern, seasonal pattern, of Bitcoin prices in March, it was heavily skewed to the upside only by one instance of the strong emergence of 2013, right? There was this significant push, and there was like this extreme outlier that pushed prices in March by like 200% or something like that. Other than this, the month of March is typically fairly negative, as in it's either neutral or slightly skewed to the downside, right? I mentioned this one outlier of 2013 because it combined an accumulative perspective. It provides with average return that is close to zero. It's 1.5% maybe, if I'm not mistaken. Some very close odds to it. Very, very innocent, almost neutral seasonal pattern to it, right? The median return is also negative there, if I'm not mistaken. Again, I may be making this up. Somewhere -4%, something like that. It was in the report that I put out Twitter. So it's a very mixed kind of like environment based on the historical data, right? Regardless of that, I'm going to follow the trend, and perhaps this year is going to be magnificent, just like we had in 2013. You never know. However, what I'm saying is, if there is no strong seasonal pattern, just like it had in, let's say, in January, right, or like the strongest seasonal pattern that you got uh, from September lows into October, November, and December, which tend to be the strongest one, kind of like the quarter four, then then I would argue that not having those strong odds makes me think, okay, maybe it's not the best time to just go nuts and crazy about investing in March, right? Perhaps it will be extremely good and perhaps it will blow everybody's minds. However, the odds are not as promising as they are for some top performing months of the year, right? So again, reading those historical records and data can be source of valuable information, right? So it tells me that, okay, March may not necessarily be the best month. I'm happy to get surprised. I'm extremely happy to be wrong about that, right? If I'm wrong, I'll make money. I love making money when I'm wrong. How cool is that, right? So just gauging on the past records, it's not spectacular. This most of the time it was 60-70% of the time I think it's a losing month on average over the last 12 years. So those are not necessarily good odds. However, there was this one strong outlier of 2013 which just pushed the mean returns towards this break-even level approximately. Other than this, it's a little bit of a warm-up month, I should say. That's what it
Hmm.
is.
Yeah, could be that we're moving into quarter two and the holidays are over, the Santa Claus rally and the bump in jobs, like holiday jobs and consumer spending have all passed. Quarter two, we're beginning to look at like reduced earnings expectations from corporations, layoffs continue, quarter two and the new year could just be a time of like looking at things through a more realistic lens, and we see a little bit more risk off behavior and sideways price action in risk assets and even in equities. So, yeah, I agree with what you said. Now, I know you got to go. So, what'd you give up for Lent, if anything?
What did you give up? Yeah, very good question. What did I give up? That's a you made me think about that even more. Um, Typically, because this busy time kind of like gets into me, and I try to. I'm still like, believe it or not, my bald head may indicate something else, but I'm 29, right? So my life is still a mess that I'm trying to organize. It's getting better, right? However, probably spending a little bit more time on the prayers is what I aim to do. So giving up, I try to look at it from the perspective of on what my focus is rather than
Hmm.
what I give up per se. It's not that I'm not eating bananas or not eating sweets, right? That's not necessarily my goal. My goal is to think more and, well, by every day get closer to God, right? I do sing in a men's choir, so we operate this beautiful Lent time pieces, right? Like Miserere Mei Deus. I posted it recently on Twitter for everybody to look it up by Allegri. Uh, Such a beautiful piece. So tons of those meditational pieces, putting myself in this beautiful choir that is called Cantores Minores. It's an cathedral, choir, the main cathedral,
Hmm.
kind of like a choir in Poland. And it definitely puts me in this meditation mode every time I'm there, every time I sing in the mass. And there are tons of concerts as well. So it makes you think, it helps you think. So I always try to increase the time spent for God. I do try to help more with selflessness, if that makes sense. So I'm trying to be more selfless. I'm trying to be more a listener, right? Uh, this time, because I'm a little bit forced in a positive manner of this to talk, right? Normally I would shut up and I would let you talk, man. I mean, I'm 100% positive you've got so many more interesting stories that I could ever tell, man.
No, it's been a great chat, and I know you got to run. So I was just curious what you gave up. I gave up barbecue. I give up whatever I'm indulging in too much, whether it be chocolate,
Good.
beer, or that sort of thing. So I gave up barbecuing. So I'm not eating barbecue, but I'll cook it for other people and just kind of like enjoy the smell and everything. Funny thing with Lent is like
Hmm.
Easter's always so long. Like when you think of Lent, you think of 1 month. but Easter's so far away from where Lent actually is, so it ends up like after 4 weeks, I'm
You're
like, okay, I'm ready to eat whatever I gave up. But then my wife's like, nah, you still got like 2.5, 3 weeks to go. So that's when it gets really challenging. Yeah, thanks for
you're
sharing
right.
that. And um, we're out of time. So if people want to hear more about you and your singing and your trading and your insights on the market, where's the best place for them to find you?
Thank you so much. Um, Great choice on giving it up with the barbecue. Probably that's too good to be had every day, I suppose, right? Yeah,
Yeah.
I would say that if anyone loves to look up, feel free to search under crypto_Birb BIRB, like Barbara. Then definitely go and make sure you follow the Birb Nest at the Birb Nest BIRB again. That's where we put tons of valuable content and insights for traders every day, especially if they want to learn and especially if they have come up with lots of losses. I know how the reality just can get into you for FTX, for all of those crashes. It's terrible. I've been there, done that. So just myself, I'm really trying along with my excellent, beautiful team to commit and create the resources that will help people get better at trading, right? So the Burb Nest is definitely on Twitter the one to search under, even more so and even better than under CryptoBurb, I think.
All right. Well, thanks for coming on. For everyone that was watching and listening, you've been watching the Market Report. We're here every Thursday at 12 p.m. Eastern. Adrian, thanks for coming on. It was a pleasure chatting with you. I look forward to doing it again in the future. Good luck with your meeting and peace be with you.
Peace be with you. God bless everybody. Thank you so much.
All right. Ciao, ciao.